Hey everyone, thank you so much for joining Archangel Alts. And we're going to go right into our next lesson plan. So I always like to just kind of have the market running in the background when there's not really a need for any major visuals. We're just here talking, and as we learn together, we're just going to cover some of these topics that are part of the Freed plan. This is something that'll always be available to you. We're not going to do a limited time, time where you only get to learn stuff for a certain period of time here. If it's free, it's free. Free forever. And then we'll have more advanced stuff added to the paid subscription plan, $99 reoccurring a month. That comes to roughly $3 a day to get all the advanced training, the deeper insight on market analysis and individual coins, and the live trading, where we'll work side by side with you, going over deeper specifics on the charts and indicators, etc., etc. So we'll cover all those things in the free section as well, and you should be equipped with everything that you need to get trading with us live. We'll do free live trading and more deeper diving into the technical analysis while we're trading in the paid subscription group. So the topic for today's lesson is FUD and FOMO. And I think that anybody that is interested in the cryptocurrency landscape would be missing something very important if they weren't to talk about this. So you'll probably hear this said a bunch. You can probably do a Google search and it'll cover it for you. But we're just going to go ahead and lay it out there so you don't have to. FUD is fear, uncertainty, and doubt. And FOMO is the fear of missing out. And I am going to go a little bit more into the in-depth, especially the psychological aspects of that in the next more advanced teaching on this. But you can imagine a lot of it for yourself. And the main reason that these are such important components is that they are such an emotional and psychological driving force in trading. And therefore, a lot of people that have especially been trading stocks for many, many years, whether they're doing shorts or longs, they will be kind of in agreement that you should, plan your attack, your strategy for laying down your trade and exiting a trade at profit. Measure your risk versus reward. Look at what your profit is, set up your stop loss, and then don't change a thing. Don't trade emotionally. And I understand the logic in that. And if we weren't doing something that was so, I hate to overuse words like unprecedented or revolutionary, but I mean, we're having an experience with a process that seems to work in a way that may just really stretch and even bend and break some of the rules for the better. So looking at fear, uncertainty, and doubt, and fear of missing out, I'm going to point out just on the most basic level the psychological impact, and if I can even find an example while we're just sitting here discussing this, so that you can have a kind of natural understanding of what it looks like or what it might be like to experience it on the market. We'll see if the opportunity lends itself. I actually love to be able to teach things with something that's actually happening live, if it's possible. Live came out weird. Just for the sole purpose that once the charts are done, you'll notice, you can see everything that was plotted in each of these periods of time, but they don't move. And so all you see is what the final result was after a minute has passed, or after 5 minutes have passed, or after 2 hours have passed. And so you can see the overall movement, the gradual movement, and the range that it covers for price and other things. But you don't really get a feel for forgive me for using, animated words for inanimate crunching of numbers, but you don't really get to experience the life force of the moving energy of the market, people's brains making decisions and bots responding to those decisions, and people grasping at their indicators to try to make the right call at the right time. And, I hope this, $10,000 goes the right way. A lot of things that I'm sure gamblers go, even in more intense experience, maybe about the same experience. But it's nice to be able to see, let's say that you see this going down, and you think, oh, okay, well, this is the right place to go in. Well, if it's a lot of money, it's going to be natural for you to respond with fear. As you're waiting for it to clear, okay, so it went down a little bit. Is it actually going to reverse? Is it going to keep going? I don't know. There's uncertainty. So let's say that you have waited and waited for it to, let's pretend you were over here, and you waited and you went in right here, and it starts to go up, and then it goes down. Oh no, did I make the wrong call? Is it going to keep going down? What do I do? What do I do? A little bit of fear, a little bit of uncertainty, but also doubt. Now you're not trusting the positions. But it's true. Okay, so this is looking at fear, uncertainty, doubt, FUD in terms of our technical analysis. We're looking at charts and we're just studying the technical movement of things and trying to assess the right time to enter into a position, right? And the same would be for exiting the position. Am I waiting too long? Did I set it too high? Should I change things? Should I trust my instinct? Should I trust the indicators? Should I let it ride? Et cetera, et cetera, et cetera. But the same is true in your fundamental analysis, which is everything that has to do about the thing that you are studying. In stocks, it could be the corporation, the company. It could be the news that is happening that day, the news cycle. What's happening in the world? Did President Trump say something that made somebody angry? Or, gosh, who's the next president? I don't know. So in a couple of years, we'll have to update that information. But, what happened when somebody went to North Korea? The trade plans, scandals in Congress. SEC is going to clamp down on tokens. SEC is friendly towards tokens. We are going to get an ETF very soon, an exchange traded fund. We're not going to get an ETF anytime soon. All these different things play into the same stuff. And sometimes we see that play out live in the technical analysis. This just in, something terrible happened. Oh my gosh, what's going to happen? Should I buy? Should I sell? And people panic. And sometimes they're right to. Usually the people that are going to make the market move already know what's going to happen before you have figured out the fundamental news. So, if you react too quickly to your emotions, then you'll be scrambling to catch up at least several times a day, depending on how often you're trying to trade. Fear of missing out is the same thing, but kind of in the opposite direction. What if I don't get into that thing that I really want to get into quick enough? Fear and uncertainty and doubt might be, the hesitation. I'm afraid to get in, or I'm afraid what happens to my positions if I'm already in. Uncertainty, what happens if the market's not going to be there tomorrow? When are we ever going to find out what happens with the next ETF? And what if it doesn't happen fast enough? All these different things. Uncertainty can cause people to not only, not go into a position or feel really uncomfortable about what they've already done, but it can also cause, the market to weaken over time if there's too much uncertainty. It's not just, the doubt aspect of things, but the uncertainty is a huge thing. It can cause you to delay your decisions. So fundamental analysis and technical analysis, these play a major role in both. Fear of missing out is really fascinating to me because people absolutely, anybody on any level, beginner level, know that you're supposed to buy low, sell high. If you're going to earn money on your position, then you want to buy it here and sell it here. You don't want to buy it here and then sell it there. But oh my goodness, fear of missing out will get you to make the exact opposite decision. And let me just see if there is anything that is just going way too high too quickly right now. I'll look over here instead. RCN, it's actually been doing pretty well lately, so it wouldn't surprise me to see it high. But let's just pretend that these were just radically, dramatically high, okay? In fact, the most obvious thing to do would be to go to the beginning. Usually when something is first listed, it gets quite the boost. This one, not as much as... Okay, there we go. So... let me see if I can get in closer there just to see how long of a period of time that lasted for. If it takes too long, I'm not going to waste my time scrolling and scrolling. Wasting my time, wasting your time. Don't want to do so. So, I would like to get a little bit more in there. There we go. Fantastic. So you can see that, even on its best day, we would say that this is worth maybe around 0.0025-ish. And you can see that now it's actually 3 decimals instead of 2. But this was, almost double the first position that it actually settled into. So this is going crazy. It's up, it's down, it's up, it's down, it's climbing, it's going crazy. And, you see this could keep going forever. And, okay, I'm not going to do it. I have fear, uncertainty down. I'm not going to get in. I don't want to get stuck up there. Oh, but it keeps going up. It keeps going up. I'm going to go in right there. Okay, I couldn't get in there. I'm going to try to get in there. And then it drops. And you say, oh my gosh, I've seen this before. This happened with, quick, help me make my point. It happened with this coin back there, and I told myself I'd never do that again. And it happened with this coin over here, and I told myself, look at the difference there. Wabi. I told myself that, I'd never do that again. So, oh gosh, I'm going to lose. I better sell. So, what did you just do there? You literally just bought high and sold low. The most simple thing you tell yourself not to do. So I'm not saying that if you get into a position and it's absolutely not the right thing for that time, that you should just never protect yourself. I'm not going to that extreme. But fear of missing out, it causes pumps and dumps when people organize groups to choose to pump an item at a certain time. Let's just pretend, this is uncommonly quick, but this is actually, and it is what Bitcoin just did. And Bitcoin may be getting pumped. I know that it does regularly. But, you see this, and your logic should tell you, okay, well, if I look at what it's been doing, no. Okay, this is averaging somewhere around here. And if we had a strong peak over here, I shouldn't expect it to go much higher than that one. But you're watching this, and it's happening so quickly, and, there's a chance I could make my 1%, 2%, 5% really, really quick. And you go in, and then it drops below where you went in. And so you try this again. And, I'm not saying that there's absolutely no chance that you'll ever get anything quickly. I have, measured when I'm willing to take those kind of risks every once in a while myself. And instinct is something that, sometimes I guess it's possible that you could say that some people either have it or don't. But there are certain levels of it you absolutely can develop an instinct. And you just know, is this, the classic pump and dump, there's not going to be a third or second wave, and therefore, if you get stuck, you're stuck. So fear, uncertainty, doubt, fear of missing out, the emotions and the psychology of trading and understanding the fundamentals, what's going on in the world, what's happening with specific coins, is something being delisted, has something just been listed, did something get an X against it for doing something bad out in the market? Do people on Twitter just hate something for some reason? Did Coinbase just list something? All these different types of things play in. And so people are excited. They want to try to get in on something good, but then they're not sure if somebody's telling them the truth. There's a lot of fake news out there. They don't want to miss out on an opportunity. But then very often, if you're not just playing it kind of even and not being led around by your emotions and just looking at the charts, following the principles, looking for a good entrance and exit plan for your trades, then your emotions will lead you all over the place. And the masters, the experts at manipulating your feelings, are all out there to take advantage of you, pump up a coin, and then leave you stranded. They require your trades for the volume that makes it go up, and then they'll let it come falling back down. So those are the most important things for you to understand about FUD and FOMO. Now that you know fear, uncertainty, doubt, and the fear of missing out, you'll understand that the two most important components at play there, emotionally and psychologically, are fear and greed. So we will go deeper into those things for our paid subscription side. Thank you so much for listening. Please join us every day for our crypto news, for the market watch, for live trading. We're going to be trying to keep all the different things rolling. Right now, I'm a little bit behind on some online content as I'm getting our lesson plans rolling. But thank you so much for joining Archangel Alts. And for now, Archangel Alts out.